Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.
In this lesson, we will examine two types of employer reimbursement plans: accountable plans and non-accountable plans. If a taxpayer receives reimbursement from his or her employer for moving expenses, how the taxpayer reports the amount and moving expenses depends upon whether the reimbursement is paid under an accountable plan or a non-accountable plan. Employers are responsible for telling employees what type of reimbursement plan the employer uses, as well as which records the employee will be required to provide. To be an accountable plan, an employer's reimbursement arrangement must require the employee to meet all three of the following rules. First, the employee's expenses must have a business connection. Second, the employee must adequately account for these expenses within a reasonable amount of time. And third, the employee must return any excess reimbursement or allowance to the employer within a reasonable amount of time. Additionally, accountable plans require the employee to keep adequate documentation of expenses, such as maintaining an expense report, statement, or diary. Employees may also be required to provide receipts, canceled checks, and bills. Non-accountable plans are those reimbursement arrangements which do not require the employee to meet the three required rules discussed in the previous section. Such plans might include the payment of excess reimbursements which the employee fails to return to the employer, or reimbursements for non-deductible expenses. Additionally, an arrangement which pays for moving expenses by reducing the employee's wages or salary would be treated as a payment made under a non-accountable plan. The employer must add the amount of any reimbursement paid under a non-accountable plan to the employee's wages or salary.
Like what you see? Get unlimited access to all of our CPE courses at www.teachucomp.com/unlimited CPE.